Hi, welcome to the Market Alert for Monday, the 23rd of March 2020. So stocks suffer worst week since Lehman despite biggest Fed bailout ever. We'll come back to this bailout bit in a moment. And it's gone. Absolutely, it did absolutely nothing. But today, the big news is this. You may not have spotted it, but Senate far short of votes needed to advance coronavirus bill as clash between Republicans and Democrats intensifies. And this is the important bit here. It says, with Democrats opposed, procedural vote fails on, get this, 1.8 trillion package for the markets and business. At the moment, there's a stalemate of 47, but what they're going to do is, as the markets are limit down this morning on the futures, they would have a look here. It says McConnell set another procedural vote for 9:45 Monday morning and dared Democrats to block it, noting repeatedly that the vote would come shortly after the opening of the stock market. So this is brilliant. I'm going to spare you the rest of the detail. But basically they're saying that if the market doesn't react and behave the way they want it to, i.e. move up, 10,000 points today, then they're going to try and force this vote through and print 1.8 trillion. It's on the cards. We know this, having made 1.5 trillion available for the repo market and 700 billion a month, etc., etc. But so keep an eye on this one at 1:45 our time. Yes, that's right, because we're still behind by an hour of the US. We put the clocks forward next weekend and then we're back in alignment. So keep an eye on this one. So overnight, the markets have gapped down. This is Friday. Usual thing, the market trading up, but as soon as it broke the 200 MA, that was it. It was down. And then overnight, the markets have opened limit down and are trying to make some sort of a bit of a rally at the moment, but failing miserably. Europe up as well, as I look at the other screen there. And this seems to be the new pattern at the moment. 5 a.m. Between 5 and 6 a.m. you're seeing the markets moving to the upside in the futures market till the main event of 7 a.m. in Germany and 1:30 in the US when the cash markets open, and then people try to get their shares out while they still have some sort of value, because certainly going forward they are not. There'll be rallies, there'll be dead cat bounces, but overall the market will then revert back to where it should have done many years ago, to fair value, as will the housing market as well going forward. So that's the state of the Dow. You can see there it's gapped lower, so it's likely to fill the gap, and no doubt, like I say, if this bill goes through today, then expect a skyrocket of a move in the short term. So be prepared just in case you are still trading. The spreads are massive at the moment on the Dow. I think there's 16 points this morning in the pre-market session, where normally they're 4. So be very careful about trying to attempt a move on the short side if that vote goes through, because you will get absolutely slaughtered. It won't just go through the stop, it'll gap above any stop. So be warned about that. So the rest of the news is the bond market continues, or the relationship between the 3-month and 10-year is still on the positive side there, and the implied volatility has pulled back to 65.87, which you'd expect. You've got to see the froth come out of this before you can have the next wave to the downside. That's how it works. We've seen this time and time again in the market alert. And and then we've just got the Senate thing there that I've been through. So that's really as much as I can update you on at the moment. This thing obviously is unprecedented, with the virus shutting down the world, and it's going to shut down the UK as well. So the impact going forward, short term, obviously, is everybody's health. But after this, by God, the carnage really starts with the job losses, business losses, and everything else. Dread to think, frankly. But it's been on the cards for a long time because the banking crisis was never cured in 2008. They've run the debt up, and now they continue to run it even more. In fact, I'll just show you this, just 1 second. So here you go, you can see this. This is the Fed's balance sheet of all assets purchased and expanded. As it says there, the Federal Reserve balance sheet has expanded and contracted over time during 07 financial crisis, subsequent recession. They increased by 870 billion in August 2000 to 4.5 trillion in early 2015. Then we saw a bit of a pullback. So here you can see where they printed 800 billion to save the banks, and they went through QE1, QE2, QE3, and this tied in exactly with the stock market. I'm working on a video at the moment about all of this to show you the relationship. And then we saw the Fed balance sheet being reduced, but unfortunately, and then interest rates increased. But it backfired. The market didn't like it. And in 2018, the market had a major shakeout, and they stopped doing this. They tried to carry on through January 19, and then eventually they stopped because the markets didn't like it, and we kept getting bigger and bigger corrections in the market. And keeping the markets alive has been their objective and goal. But you can see that from September the 16th actually was the catalyst that happened in the market, or the straw that broke the camel's back, without putting too many metaphors in, but it suits it, when they needed to print 75 billion a night in the repo market. And this sent the borrowings through the roof, and we haven't even got started. We've got another 1.8 trillion to add to all of this, plus the 700 billion a month, plus the 60 billion T-bills isn't actually included in this that they've been running. So it's not looking good, let's put it that way. But I am going to record a video on this and show you where I believe that it all started to fall apart, which was on September the 16th of last year. Okay, that will do it for this one. If there is anything else to report today, I will let you know. Keep your eye on 1:45. Can't guarantee the time, of course. It depends what the market does, whether they go to the vote, and the vote won't happen until later on, probably this evening. So, but just be warned of that being in the background. Okay, that's it. Thanks for watching. See you in the next one.